Welcome to the Module 3. In this video, we are going to learn about the IFRS and GAAP as an overview. All the organization maintain these sets of statements: income statement, balance sheet, cash flow statement, statement of changes in equity, and notes under IFRS or GAAP. IFRS stands for International Financial Reporting Standards. These standards are issued and maintained by International Accounting Standard Board and were created to establish a common language. At present, more than 160 countries follow IFRS. GAAP stands for Generally Accepted Accounting Principle and is a set of accounting standards which are followed by most US businesses, not-for-profit organizations, state and local government, as well as non-US companies that list their stock on US stock exchanges. GAAP guidelines standardizes how and what organizations report so that interested parties such as investors, lenders, potential investors, tax authorities, etc. can better understand and utilizes an organization financial statement. In absence of these regulations, company will claim they are showing a true picture of their financial affairs, but in reality they may not do so, like in case of Enron and WorldCom. The financial statement have to be audited by the external auditors and give assurance to investors and the other users that yes, the company is having true and fair picture. So if company is showing they have this much of revenue, in reality also they do have same. They are intended to provide the information like company's financial position and the performance in a given financial year. The notes are required by both GAAP as well as IFRS. The company required to maintain it so that the investors can actually know how the figures are shown in the financial statement as are actually determined and what are the accounting methods which are used. Now let's look at little more about IFRS and GAAP. Because of transparency and uniformity in the way of presentation, it has boosted the capital market globally. And if you are investing in some foreign company, you can understand as well as compare the financial statement with similar kind of company in your country. Now we'll see some presentation differences of income statement and balance sheet under IFRS and US GAAP. For income statement, which is also called profit and loss account statement in IFRS, has no special format of income statement. It need to be followed a general format, but under GAAP it prescribes a specific format to prepare. They have to use the single step or multi-step format. Under IFRS, there is a category of extraordinary items that are prohibited from being included in the income statement when it is prepared under this regulation. But under GAAP, it allows these items in the line in the statement as general. So these were some of the differences between the two for the income statement. Now let's see for the balance sheet. GAAP standard require assets, liabilities and equity to be presented in decreasing order of liquidity. The balance sheet is generally presented with total asset equaling total liability and shareholder equity. IFRS guidelines don't require any specific format, but entities are expected to present current and non-current assets as well as current and non-current liabilities as separate classification on their balance sheet, except when liquidity presentation provide more relevant and reliable information. Here are also few terminologies differences in the balance sheet.